Onose, it's good to have you on the program.
Morning, Will. Thanks for having me.
So we're seeing the budget here, the breakdown of the budget. We're seeing for education 2.18 trillion, that's 7.9% of the budget. We see defense and security infrastructure, which is quite interesting, 1.32 trillion, 5% of the budget. How do you see the government coming into the equities market? How do you see the equities markets playing a role in the government's channel of raising funds?
Well, when it comes to the government trying to raise funds, we know that if they're trying to raise funds, they most likely would want to keep interest rates down. So and that ties into MPC, monetary policy rates. Now we know that we heard that the government had, should I say, suspended some of the members of the monetary policy committee. Now, when you think about how the Monetary Policy Committee, their trend, over the last couple of months, they've been more likely to raise rates. So now you have a government that is getting ready to borrow a lot of money, and now they want to change some of these members who have a history of raising rates. And now you can kind of draw certain conclusions that, okay, I think they would want to keep monetary policy rates low for quite a while. Now, if they are keeping monetary policy rates low, when I say low, I mean probably not raising it or not raising it by a lot, then investors don't have a lot more to look forward to in the fixed income space. If rates are not rising in the fixed income, income space, and then we are at a point where people might begin to look, for dividends next year, then it stands to reason that a lot of some of those funds, that would have gone into fixed income will start to flow into the equities market. So that's just one vertical or one way that one major way I believe that the equities market will be impacted by the government their borrowing activities.
Oh, that's interesting to know. But let's look at major, we can't let go without talking about it, Seplat, which pushed the oil and gas index up more than 6% yesterday. What do you see this move by Seplat, this expansion, how do you see it impacting the whole of the investment space in the country?
There are a couple ways that that it could affect investment and even other things in the country as well. Normally, this may not be as I wouldn't say important, but in a more diversified economy, it wouldn't be such a big deal. But because of our country's reliance on oil, if Seplat is able to acquire some of those assets and potentially increase expand and increase their oil production, then one, it could actually now mean higher revenue, possibly for the government. If that happens, then our foreign reserves, which has been on a decline, might see some improvements. If our foreign reserves sees improvements, then that might increase the government's ability to quote and unquote clear off FX backlogs. If they're able to clear off FX backlogs, then it means more people have access to FX, and then rates come down. And if rates come down, then that helps the entire business space.
Of course, we're waiting for that to.
That is,
we're waiting for that to help the entire business space, because we need more FX inflow into the country, and I say we desperately need those dollars. And I know the laddie is right there itching his fingers to grab some of them, but he's been talking about it. But thank you so much, Onose Asotienaolo, investment analyst with Mainstreet Capital, for sharing your perspective on Business Morning.